nice to see you all, everybody. So it is intended today to be a bit of an introduction. So maybe if you are new to clerking, or maybe you've done it, gone away, come back to it, maybe you're a bit uncertain about things, or if you've been in it longer, like the couple of people we spoke to, but you just want to come for sort of a bit of a refresher, some tips, maybe just to see what we're talking about, that's fab. It's not Scribe specific, it's just kind of quite general, but with a few sort of references or examples taken from Scribe. So I'm just going to share my screen with you all. There we go, lovely, hope you can all see that then. So really starting from the beginning with regards to an introduction to local council accounting, and really thinking about what that means specifically, because for all of you who are obviously in this sector, you probably appreciate how different it is, particularly if you've got a financial background from another area. This is quite different. You almost need to take everything you know about kind of business accounting, financial accounting, you know, throw it out the window, start again. So that's kind of one of the first things to get to grips with. There's all those sort of differences and specifics relating to that. So I want to kind of cover that as well today as we go through the process. Okay. So in terms of an introduction then, really wanted to take it right back to the beginning and think about what is a parish or town council, and what does that mean in regards to thinking about our financial information that we need to keep and provide. So I've defined it as an elected body at the first level of local government, makes decisions on behalf of the parish and has a wide range of powers relating to local matters. So the considerations from that in terms of a kind of financial sense are firstly the transparency. So obviously to provide these services, there's a requirement to take a precept. So obviously you're dealing with public funds, so there's a requirement therefore to be transparent, to be open and honest with what's happening with that money, and obviously to provide that transparency and that information, you need to have good financial information. You need to keep accurate financial records. Equally, you want to provide those services efficiently, so making sure that you're making the best use of those funds in the things that you do, the way that you contract out, that you pay your supplies and how you deal with those things. A massive part of this is setting the precept. So a huge element of this is about how much do we actually need to provide your services in your area, in your parish. And that's really important because on one hand, you don't want to set the precept too low and have a situation where you can't then provide all the services or it leads you in a budget deficit. Or equally, you don't want to have that precept set so high that actually you end up with a surplus. In a business kind of sense, a budget surplus would be really good, but in a council sense, actually that shows that you've taken more than you needed to, and then you've got to work about how that then goes forward and what you do with that. So it's about setting the right level, and again, it's so important to have good financial information to allow you to set that budget and think about what precept do we need. And there's lots of considerations around that, and we do much more detailed sessions on that sort of in the autumn time. And equally important to manage reserves as well. So as well as the services and things that you're providing sort of on a monthly, annual basis, what else do we want to do? What projects might we want to be planning for? What else are we thinking about going forward? So hopefully you can see how all those things have a relationship to good financial information, and you keeping that good financial information helps you deal with those considerations. Specifically then as your role as RFO, and like we heard, you may be the RFO and you may have a clerk and a sort of separated job roles, or you may be the clerk and the RFO as well, particularly if you're in a smaller council. So every local authority is required to appoint an officer to be responsible for the administrations of their council's financial affairs, so the responsible financial officer. They should be a paid employee of the council, and some of their responsibilities include following those proper financial procedures and having internal control and audit systems. So that's probably something that you've been mindful of, particularly if you've just gone through the year-end process, had the internal audit come in, completed the annual governance statement with ticking those assertions of dealing with those procedures, etc. So thinking about them particularly, but making sure that on a monthly and an annual basis, those things are being dealt with and things are being done correctly. Okay. Obviously, really important to be reporting to the council on the spending and the current position, because this is key to help in making informed financial decisions. You know, where are we with the budget? What have we spent? Where might be some areas of concern? Thinking about that. And as I imagine you're all very aware of at the moment, the completion of the AGAR. So the year end was the 31st of March, and you probably hopefully all gone in a distant memory of all that additional working required to complete the AGAR. And another theme I kind of want to go through with today as well is, if you have just done the year end and you're not completely new, that the things that you've done to create the AGAR, just to think about, were there areas that were really complicated? Did I have to take longer on some areas than I was hoping to? Was it more complicated than I feel that it was necessarily needed to be? And just have that as kind of a theme to think about, how could I make improvements to what I do, the information I keep, the way I keep that information, so that when I come to do the year end next time, it's easier. And the things that I've struggled with this time, I've tried to address. Okay, just to kind of make that life a little bit easier. And that's kind of a bit of a theme of the things I want to talk about today. Okay. So I also want to just cover the difference between the two accounting approaches, just to clarify that, because often we speak to clerks and they're either not sure, or they think they're working on one approach, but actually it's the other one. So just making sure that we're clear on how you've actually completed those accounting statements. So that's either in receipts and payments or in income and expenditure. So receipts and payments is a really simple form of accounts. And I always say that it's just simply what happened, when it happened, regardless of when it related to. So you record it, you've made a payment on this day for this amount of money, and that goes in the cash book as at that point. Now it's very simplistic. And if you've come from a more financial background, or maybe some of your counsellors have, often that can seem sort of very, very straightforward and simplistic without considering actually when it relates to. But often, if you're smaller, it doesn't need to be anything more sophisticated than just recording the ins and the outs. And equally, if you're not maybe the most comfortable in like the financial element of the role, because particularly if you're the clerk and the RFO, you've got a lot going on and the finance bit might not be your favourite element. Actually, if you're working in receipts and payments, it's in many respects just accurate record keeping of what's gone in and what's gone out. In terms of income and expenditure, it's that bit more sophisticated, a bit more sort of similarities to more financial sort of business accounting in terms of considering the period to which transactions relate to, rather than simply when they occurred. So if you completed the year end just gone, in income and expenditure, it's likely you gave some considerations to your creditors, so people you owe, your debtors, people who owe you, and adjusted for that to make the financial year that you've just dealt with more relevant to what actually happened and what related to that time period. Okay, so they're just the sort of the differences between the two. In terms of who actually needs to use that and what council sort of requirements of that, so if your council is less than 200,000, so that's total income or expenditure in the year itself, you can use receipts and payments accounting approach. And that's true unless you go over 3 consecutive years. So if you go over the 200,000 for 3 consecutive years, you will have to move to income and expenditure. Okay, you may have a scenario where you simply go over 1 year because you had a large grant or a lot of SIL money comes in, for example. But if you go back down to that lower level, then you don't need to move to I&E just for a single the year it is. It's the 3 consecutive years. Having said all that, you can be a smaller council and opt to use income and expenditure. And as I said before, that can often come as a result of people having quite strong financial backgrounds and feeling more comfortable with a slightly more sophisticated accounting method. Okay. Do remember as well that if you find yourself needing to move, or you do decide to move, you must remember that both your years that you complete on the accounting statements in the AGAR always have to be using the same accounting approach. So if you move to I&E, you will need to restate the prior year. So do be aware of that. And if you find yourself expecting that to be the scenario of this year, then you can start to think about restating 22-23 now. You don't have to wait to get to this year end. You can get that process rolling, okay, ahead of the time. So thinking about, we kind of thought about how we need to think about our records and why they're so important. So now we can think about how we do that and good procedures to keep on top of them. Okay, so fundamentally, again, it's mainly all about the cash book. Okay, so the cash book, the most important accounting record for local councils. And that very simply is a log of ins and outs. So it can just be, receipts and payments. It might be a spreadsheet, it might be software, but it just needs to be accurate and up to date. And you need to keep all the record, all the information that you need. Okay. So considerations when you're collating your accounts. So firstly, to do it regularly, and that's sometimes easier said than done, particularly if you're part-time, it's just you at the council. it can feel like there's a lot going on, but just keeping on top of it regularly just, flattens it out, makes it feel more manageable. We're aware of a few people who kind of leave it a very long time, and then year end comes and suddenly there's a lot of work to do. And I personally would hate that. So I just think that if you can do that on a regular basis, it just keeps things ticking over nicely. Of course, when you record those transactions, make sure you split out the VAT. I'll talk about VAT in a bit more detail in a moment as well. Also, you need to think about the full audit trail. So when you're putting that information into the cash book, have you got all the related paperwork, the invoices from your suppliers? Can you easily find that information? So if somebody said, well, I need to see the paperwork behind this payment transaction, you can go to it easily and you've got that information. Regular bank reconciliations will help confirm that your data is correct. So obviously, if you've missed entering something or you've entered something at the incorrect value, doing a bank rec will flag that up. So again, that regular bank reconciliation to make sure data is accurate, and hopefully that's something that you would then be taking along to your council meetings along with your sort of budgets versus actuals. If you've got your bank reconciliation, then that's helping to confirm that your data is up to date and it's accurate. So when you're putting all that information into the cash book, and particularly when you think back to the year end you've just completed, ask yourself, can you produce timely and useful information easily? Was there areas that were really onerous, that's really complicated? How could I maybe make my cash book work better for me? Okay, was there information missing? And sort of further to that, also, is your accounting system fit for purpose? Do you need training on it? Does it suit the needs of your council? Often we hear from people who say, well, I've started a new role. I turned up on my first day. I was given a laptop, pile of paperwork, and off I went. And often there's no handover, there's no training. It's just an expectation that you've got to just kind of work out what's going on. And it can be so hard to pick up from where someone's left off and work out sort of what's been going on. So actually having that support, maybe some sort of training manual or way that processes work, can be really useful. And also, so in a wider sense, in terms of, is it just on a single laptop? Is it backed up? What happens if, the laptop blew up or the person just left and is never seen again? How do you share the information with your counsellors and other people that you need to? So all those considerations about surrounding that and thinking about the best way that you have that information stored and then you provide it. Okay. So in terms of, it was just an extract of a bank reconciliation from Scribe just to show that you can record all that information to show that it balances nicely. So that's something that I'd recommend that you do regularly, as we said, to keep on top of that. So in terms of the cash book itself and thinking about the structure of it, the first thing, the key thing really, is to base it on your council budget or your preset breakdown. Now that tends to sound fairly self-explanatory because you think, well, that would make sense. But actually, again, it's surprising how many people who've come to us at Scribe and got a really nice budget. It's broken down into sections. It's got the budget lines. It's got the budget amounts against them. And then they have a cash book, generally on a spreadsheet, that actually doesn't really bear any resemblance to the budget. So if there was a question about how much have we spent against this budget line, it's not immediately obvious. So if you've got a scenario like that, then you might want to start thinking about, do I need to change the structure? Do I need to record things in a different way? Obviously, you ideally want to allocate your payments and receipts out to your budget codes. Okay, you might want to group certain codes together so that if you have committees or certain sections that you want to report on, you can do so. If you think about the village hall, can I easily produce a report that says, on one hand, what income do I get from the village hall? What does it cost me to run the village hall? What do we pay on rates, utilities, maintenance, cleaning? So I can see exactly what's going on in that scenario. So if you're thinking about the sort of reporting that you need to do and the information you get asked for, base your cash book on that so you can get that information out. So it might be that you need additional codes to analyse the data further. So if it's quite broad in the sense, so you might have something for admin, for open spaces, but actually I really want to break it down to think a bit more detail about my phone costs, my internet costs, my salaries, etc. Or maybe I want a bit more detail in certain areas or different elements of maintenance, of grass cutting, hedge cutting, trees, whatever it may be. Can I separate that information out to a lower level to allow me to analyse it further? That will also help you when you think about budget setting. That will be here before we know it, and think about budgeting. And actually, if you've got a bit more information about what you actually spend on those more specific elements, that can often be helpful. Having said all that, you may have a cash book that has every single code that or transaction option that you can ever think of, and it might be far more detailed than you need it to be. So could you actually sort of reduce that long list of everything that you can allocate out to, and just narrow it down that little bit. Also consider, are you recording as much information as you can that makes it useful to you? So in terms of, have you got the VAT number against your supplier? Have you got the invoice number, so that if the supplier phones up and says, have you paid this invoice, you can easily check that without having to trawl back through all the paper copies of the invoices? Did you have all the information you needed for the year end? Were you easily able to say, this is my staff cost figure, or were you having to top things up and work it all out? So all those things about, as you go through and work, provide information, if there's ways that you can make it better, just is worth thinking about it, because it can feel like there's a little bit of works around sort of tweaking things and improving things, but actually in the long term, those benefits will pay off. So there's just an extract from Scribe in terms of just a structure there. So sort of this budget heading, which is what we call a cost center, broken down in the budget codes. And you can see I've got budgets versus actual, so I can then really easily analyze exactly what's going on and seeing where it's going. So it gives me an overview of what's happening, and that's the kind of thing that you want to be able to produce to see. And again, that then helps with sort of informed decision making, helps with budget setting going forward as well. So just as a quick summary then, it's important to set aside time, keep it up to date, regularly, working on it, make sure you do your bank reconciliations to make sure that it's reconciled, and just gives consideration to what actually could I tweak or change about my cash book to make it that bit easier. And particularly if you are on your own and you're the single employee of the council, it can often feel quite isolating, particularly if this isn't your sort of numbers, isn't your happy place. But any questions that you have, you can access sort of support from other areas. So Jess could maybe pop in, link into our Facebook group, and then if you want to ask any question, you can, and there's loads of people on there who can give you help and support. And even if you go and look on there, you may find things, I think that's a really useful thing just to read for future reference as well. Next then, I want to talk about VAT, because that tends to be quite a big element and often can be quite daunting. VAT is not always the nicest subject and can be really confusing for anybody who's gone onto HMRC's website and tried to read the great long list of VAT things about VAT. It can feel quite overwhelming, and sometimes you read it and think, actually none the wiser as to what I'm meant to be doing. Okay, so I just kind of want to break it down a little bit, just to give you some sort of broad understanding of being VAT registered or not being VAT registered. But always, I would say that if you have a complicated VAT position or something quite specific going on, then I'd always recommend that you take specialist advice. Okay. So starting off then, thinking about VAT registered councils. So that's councils where you have an additional regular source of income. So other than the precept, you've got something going on that you're charging customers, people for, so probably raising invoices or charging things such as running a car park. Okay, there's additional income source coming in. So you also need to remember that, as we said at the start, rules tend to be different. So again, that's true of VAT. You may be aware that there's an £85,000 threshold for becoming VAT registered. So that's for sort of general businesses. That's not true for councils. As soon as you start charging something that has a VAT element to it, you should become VAT registered. However, HMRC won't enforce that until you reach an anticipated level of £1,000 worth, about £1,000 of output VAT. So that tends to be £5,000 worth of sales if everything was VAT, start charging VAT on it. Okay, so give that some consideration, particularly if you have got any elements of something coming in where there might be a VAT consideration. If you are VAT registered, you must submit VAT returns, of course. Normally that's on a quarterly basis, but it could be on a monthly basis. If you do find yourself needing to become VAT registered, I'd recommend that you try, when you register, to get your returns in line with the actual financial year, so that your quarter 4 does end on the 31st of March. We have seen some where they straddle the year end, and it just makes it that little bit more complicated. So it's nice if you can get it to tie up with your year end. Okay. And hopefully any of you who are VAT registered or expecting to need to become VAT registered are okay with making tax digital. So this is a government initiative that came in a few years ago, and originally it was optional for councils, but now it's mandatory, and therefore meaning you must submit your VAT returns directly to HMRC via software. And the idea is that it sort of increases accuracy and keeps control of what you need to do and when you need to do it. So you need to put the information into that software and then submit that information through. Okay. Having said all that though, you may well be in a scenario where you're not VAT registered, you have your precept and maybe have another odd bits of income, a bit of bank interest, a few bits of sundry income, odd grants, etc. Nothing else going on, and therefore you have no requirement to be VAT registered. In that case, however, you can claim back the VAT on your purchases, so things that you buy from your suppliers, any VAT elements, then you can reclaim using Form 126 on the HMRC website. So there is no, it's not the same as making tax digital. You still have to go directly to the gov.uk website, signing with your government gateway ID to submit that information. If you haven't done that before, you can do it by post for the first time, and I think they then give you a reference number that you can use going forward. So that's worth knowing, particularly if maybe you're new or it hasn't been done for a while. Okay. There's also no specific timing for claims. So if you're VAT registered, obviously you're going to have your returns. It's very strict and structured about when that return date end date is and when therefore it must be submitted by. If you're claiming it back, there isn't. It must be complete calendar months, and if it's less than £100, you can only claim for a whole year. But other than that, it's up to you. However, I would suggest that you try and have a structure. If nothing else, you do it annually to the 31st of March in line with year end, because it just keeps it in line. But you may want to do it every 6 months. You may want to do it quarterly, but it's good generally to have a structure, because there is no specific requirement of when you do it. It can then be hard if something happened and someone else came in to work out, when it was last done, to try and enforce a structure into there. So maybe do it quarterly, 6 monthly, annually, so that you know where you are. Having said all that, if you make a really large payment that has a large VAT element on it, you may want to do a claim sooner than normal to get that VAT back, and that's absolutely fine, but you just need to be mindful of when you last claimed to. You can also note, it's important to note that claims can be made going back for 4 years as well. So if you are new in, or maybe you're in a situation where the VAT maybe hasn't been claimed for a while, then you can go back, and it may be worth looking into that. Of course, there's going to be an element of whether it's worth your while, because obviously there's a time and cost element of you working through that process to collect that information, particularly if maybe the CASHBOOK that you've inherited isn't the best and maybe doesn't have all the information. There's kind of a trade-off between the time it takes you to the amount of VAT that you might be able to reclaim, but it's something to consider if it doesn't look like it's up to date, when you move over or join a new council. Okay, so just a quick extract there of a Form 126 schedule. It's a brief one from Scribe, just pulling all that information through. So again, you can see it's important to have that VAT number in there. So again, whatever CASHBOOK you use, is about recording the information that you're then going to need, so that you've got it to make life easy without having to go back through and looking up all the invoices, etc. in there. Okay. So just as a summary there then, so important therefore obviously to make sure that you record VAT separately in your CASHBOOK. Obviously if you've got software it's going to do that for you, but if you've got a spreadsheet, make sure you're splitting that out, particularly if you're working again in income and expenditure, because the way VAT is dealt with at the year end is different to receipts and payments. So again, it's a key element of that as well. In terms of the audit trail, obviously making sure you've got those invoices with the VAT number of your supplier on it, the VAT rate or the charge amount is clearly shown. Again, having that information to tie up with it as well. If when you last did your return, your claim, it's a long process, particularly if you're a claim, because it's likely you might be having this spreadsheet, for example. If it was difficult or took you a long time, then think about how you can address that. Is it just simply a case that you need to record the VAT number when you put the invoice in and you're not having to look it up again, etc. Okay, and as I said, I always recommend special advice if you have a complicated VAT position. Okay. So then the last part of today's session, and I want to talk about other important financial information as I put there. Now, I do this session sort of a few times throughout the year, and depending on where we are in the year will depend on what I finish on. If it's the start of the year, I tend to talk about year end and thinking about getting ready for year end, and then thinking about the way you complete the AGAR, some top tips for that. If we're in the autumn, I'd be thinking about budgeting and maybe talk a little bit about budgeting and forecasting. But because we're hopefully, I say this, I'm hoping, a little bit of a lull for you. So the year end is done. We're not thinking about needing to budget yet. And hopefully you may have a scenario where you haven't got an August meeting. So you're finding yourself with maybe a little bit more time. So as part of that is thinking about the CASHBOOK and how you can improve that information. But it's also thinking about this other information as well, and maybe what you can do surrounding that and making sure that that's up to date and is in a good place as it can be. Firstly then, just thinking about the asset register. So that being a record of your council's tangible assets, so all the things that you have in your parish, your area, so your bins, your lights, your benches, etc., and that record. The key features of that then, so firstly, it supports the information for your box 9. So when you completed your year end, then obviously you had to complete your box 9 based on your asset register. Generally, it is still just the total purchase, original purchase value, the cost of acquisition at the start of when you first had that asset. So not overly meaningful in terms of any sort of accounting records, but actually just that record for box 9. Okay, so that's key for that. Also useful to have a record of your assets for insurance purposes, and also facilitates management of assets as well. So where are they? What's the maintenance schedule? Do I need to think about repairs, inspections, replacements? What's the useful life of that asset? When will it like to be renewed? Okay, so these are all things that actually have a bearing on when you're thinking about budgeting. Have I got in any repairs to maintenance to think about these assets? Have we got some funds to replace some of these assets, particularly if we actually think our useful life that we allocated to this asset is not actually the case and it's going to come to the end of its useful life sooner than expected. Also, again, as we keep talking about these specific accounting differences for councils, there's no depreciation. So again, if you've come from a financial background and you're used to depreciation, there isn't any. You don't buy an asset and depreciate it. You purchase an asset, the purchase goes into box 6 as the payment, it appears on the asset, it stays on there for as long as you use it. When it's disposed, it's removed from the asset register. If you sell it, the proceeds go into box 3. Okay, if you don't, it's just removed. Okay, so they're the simple things to think about with regards to that. So the very basic information that I'd recommend that you keep on the asset registers, that key information is firstly the date of acquisition. You might not know the exact date. Obviously, if you've had assets for a very long time, it might only be able to say, we've had it since 1907. I don't know exactly what day I had it. The cost of acquisition, because as we said, that tends to be what feeds into your box 9 figure, although the JPAG practitioner's guide does not set what valuation method you need to use on that. And if you've got gifted or community assets, it's just a simple proxy pound for them. Okay, also useful to know the location, particularly if you've got a lot of assets of a similar nature, so a lot of benches, bins, lights, etc. That's useful to see where they are. And then again, their useful life, because if you can then start to think about when might we need to replace those assets, have we thought about the budget? Is that going to have a bearing on some of our budget requirements when we come to set it? So just thinking about, if you do find yourself with that little bit of extra time, do you need to update it? Do you actually need to review it? When you filled in box 9 this year, did you think, well, actually, this asset register hasn't been reviewed? It might be that some of the things on here are actually obsolete. We might have scrapped half of this and we don't know. Do I need to go and revisit it? Can I add some more information to it to make it useful? Is it useful to know where the asset came from? If I have any queries or I need any parts, do I need to know when it needs to be maintained, when it was last inspected, when the useful life is up? All those things to consider. So can you go and add information, because that is then useful going forward. And as we said, we're starting to think about budgeting. I want to talk about it too much because obviously you want to have a nice little summer break, but it will come around sooner than we think, and it's then starting to think about next year and the precept and everything else that's going on as well. Okay, and finally then also need to talk about reserves, because they have a relationship with assets, they have a relationship with the budget. It's again a key part of the information. So as it says there, essential that councils have adequate reserves to cover both their day-to-day financial obligations as well as any future projects. So hopefully that when you did your year end, obviously your total box, your box 7, your total funds carried forward is the total of your reserves. It says there that reserves should be reviewed and justified at least annually. So hopefully that was done in line with the year end, although I would say that needs to be done more regularly than that, because if you don't look at your reserve balances more than every end of year, then you're not keeping an overview of really what's happening, particularly if you've got spend against projects, particularly if your general reserve is fluctuating. If you had a scenario where your budget ended up not being enough, or you had a budget surplus, then your general reserve may not be in line with where it should be. So you ideally want to be aware of that, so you can think about how you might correct that, or what you might do about your other reserves to resolve that. And ultimately, does that then have a bearing on how you then think about the budget as well, and what you're going to set the precept at based on how much funds you've got going forward? So generally 3 types of reserves: general reserves, earmarked reserves, and capital reserves. So general reserves first. So they're held to cover unexpected events or cash flow problems. So something happens and maybe it's over and above the contingency in your budget, or you've got a cash flow situation because you've got to make some large spend, but you then haven't maybe had the second half of your precept, for example, covers fluctuations in incomes and outgoings such as that. Should be equivalent between 3 and 12 months expenditure. If you're smaller, it will be closer to 12 months. So if you're precept to 20,000, you might find you need to hold 20,000 because actually that's not that significant and something did happen. Okay, some councils have a very specific amount, so you may have an amount that you actually work to holding for that. Others will have a variation of expecting of the month's equivalent that they need to hold, but it's useful to monitor those reserves going forward because you want to see if you're fluctuating hugely from where that sits, so then you can think about, do we need to make some corrective action for this as well? Okay. As well as that, you may have earmarked reserves. So these are held for specific purposes or projects. It might be one-off projects. We're going to install a play park, we're going to refurb the community centre, whatever it may be, or it might be specific purposes to help flatten out the budget. So things such as elections obviously only happen every so often. So if you put an amount into a reserve every year and builds up, in election year you spend it and then you go back to building it up again. It helps flatten out your budget. So rather than having a great big spend in one year and it going back down again, you're flattening out that budget. So anything like that might happen. So replacing the clerk's laptop and equipment. So if every 5 years you're going to buy a new laptop and a new printer, you put the money into the reserve, build it up, spend it, start again. It helps to flatten that budget. And again, that's a consideration moving forward when you think about the budget. Have we got reserves in place for things like that? Or do we just come along and think, oh, we haven't replaced this for a while, haven't spent that, we now need to create a budget to set, and that has effect on the precept. So you've got to think about all those relationships. Then we've got capital reserves, held for capital purposes only, so the purchase or enhancement of fixed assets or the repayment of loans. And that will come about if you sell your fixed assets for over 10k. So if you sell a fixed asset and it's more than 10,000, you have to hold it for the specific purpose of future investment into other fixed assets. So be aware of that. Similar such as if you have reserves for SIL, and obviously you need to be clear on what you spend that on, specific requirements and time frame. So that's why it's so important to be aware of how those pots of money relate to. No upper limit for earmarked or capital reserves either. So unlike a general reserve where you wouldn't expect to have more than 12 months if you're small or 3 months if you're larger, there's no upper limit. So you could have a great big project on the go and be saving quite loads in the reserve. That's absolutely fine, but it does need to be justifiable. You may need to explain it. So you may have, if you had a scenario where your box 7, your total funds was more than your box 2, your precept, at the end of the year, you would have had to explain that based on your reserve breakdown. But as long as you can be clear on that and you've got the reasons for why you're holding that reserve, and that's absolutely fine. The only issue would become is if you ended the year and actually ended up with a greater general reserve than you were expecting, over and above what you thought you would have. And then again, that starts to have an implication on what do we do with that extra funds? Do we plan to do additional projects or things around the area? Do we then use that to allocate against the precept? So the precept doesn't need to be as big this year, and then that again has budget elements, budget considerations. So if you can, sort of the real purpose of today, I wanted to kind of say to you that I want to review where you were at the end of the year. How was your cash book? Did it work for you? Does your asset register need some love? Do your reserves need some love? And if you can do all those things, then when it comes to budget time, it's just going to make that much easier because there's a relationship between all those things. And if you're okay with all those things and it's all up to date with everything, then it's really going to improve things. If you've got all that information, then going forward, it just makes life that much easier. So I'm hoping that can be the case, particularly if you have felt recently that it's been really hard, or if year end was a real slog and it just, just hurt everywhere. So I just want to say that. But that's everything I wanted to go through. So quite a lot there, but there we are, made it through, and I will stop sharing and pass back to John. Thank you.
Awesome. Thank you very much, Hannah. So I saw that question there from Judith. I need to organize our cash book. Please do you know if there are any examples and templates? I thought I'd make a little announcement here of a new version of Scribe accounts we're producing for small parish councils. There is limitations to it, but we're tuning it to small parish councils. So this is Scribe accounts basic plan. It's for councils that don't have a large number of transactions, maybe 100 transactions or so, and enables you, you can do all your kind of tasks to meet regulations, do your bank reconciliations, you can manage your reserves, your reports, can generate your AGAR in one click. And obviously it's cloud-based, so you have daily backups. You can access it anywhere you want, and you've got 2 users in there. But also what it comes with is no setup. So already this is an example of a good cash book and a structure around it in terms of your cost centers and cost codes. It basically all comes set up with that. So you just have to log in and start entering your transactions. So you can get working in 5 minutes. I'll share a link if you're interested in knowing more about that. We're running a waiting list at the moment. I'll just drop it in there. There's a link to a website there. And you can go and sign up if you're interested in knowing more about it. So it's £12 a month, no setup required, cancel anytime, so minimum commitment. And yeah, the support package around that is attending live webinar training, group training with other users. You can access our on-demand training videos and our knowledge base, and there will be a support forum that you can ask questions and get answers from the community. We'll try our best to also answer questions in there. So it's different to our kind of more expensive packages where you get like one-on-one support via email, phone, etc., and Zoom. But yeah, we're able to deliver it at that kind of price with a self-support package in there. So if you want to know more about that, just sign up there. So we're going to jump into questions.